We currently have a negative bias on our ratings in the EMEA region, so that's Europe, Middle East and Africa. We have about 13% of our ratings either on negative outlook or a credit watch negative placement versus about 11% positive. There's three key drivers behind that negative bias in the EMEA region. The first one is sovereign related risks. So we have a number of key sovereigns in the European region that remain on negative outlook. And across the EMEA region we have about a minus 13% sort of outlook bias for our sovereign and IPF ratings. The second key theme is low interest rates. We're seeing that impact our view of capital and earnings for the insurance companies. And the third key theme is banking related risks. So a number of insurers have exposure to banks through their investment portfolios, but also a number of insurers that we rate are subsidiaries of banking groups.
Perhaps the more important consideration for reinsurers is that the current performance of the reinsurance sector has attracted new investors in different forms, in insurance-linked securities, cat bonds, for example. So there are more investors interested in the sector, and that's bringing the prices down, and it's increasingly commoditizing the property catastrophe reinsurance business, and has the prospect to expand to other aspects of reinsurance and insurance over time. So I think there's a challenge there for reinsurers to remain relevant in terms of scale and in terms of what they offer to the marketplace, because just offering capacity these days probably isn't enough.